Hello once again, everybody. This is Rich with High Percent Trading. Thanks for watching this short video. The short video today is entitled actually Trading the Institutional Algorithms Part 2. Last week we showed how to trade the algorithms that are kicking up here in each market when the institutions algorithms kick in. A nice way to trade that, combining a momentum-based approach together with the algorithm, and we're going to follow up with that again today. We're going to look at a few markets. First market we're going to look at is going to be NASDAQ. And just as a refresher to refresh your recollection on this, normally what you want to do is have some indicator or some approach that enables you to determine when the institution's algorithms are kicking in. In this particular instance, what we're going to show is actually an indicator here within high percent trading called the algo bands. And what it does, it goes back and measures when the institution's algorithms have kicked in, and also produces a nice band area that enables you to take positions and place stops based on the band. We're going to analyze starting at the pit open, in this case, which was 6:30 a.m. this morning, and that's 6:30 a.m. And right here is the pit open at 6:30. And you notice at 6:30 a.m., and this is Pacific time, of course, there was an existing algorithm band that was formed about 4 minutes ahead of that. Quite simply, the way that we like to trade this is we're going to look back to the left and see what our last signal, our last momentum-based signal was. In this case, it was to the downside. So when we look back to the left, we saw that the last trade entry on the momentum-based approach was down. Therefore, we're looking for, in this case, either our next arrow entry down, or in this case, a trade below the bottom of the band. And that trade occurred right here. Okay, this is our trade occurring right here. So this is a short entry, and as sometimes works out in trades. Not every trade works, but the good thing about this is you had a very tight stop on the other end of this. So the entry was here and the stop was here. Now normally when you have a situation like this and you have a very small support area down here, this is the next area to put a short back on if you take it out. It was not taken out, and therefore our next signal was to the upside, which was right here, and the stop at this point again is going to be the same reversal area, which is under here. Notice that never got taken out, and so because of that, the trade then went on to make a fairly nice profit to the upside. Again, all of these signals in between are basically ignored because we're already in the trade with a stop and then a trail stop down here. The next setup that occurred was a little bit later on. Again, all of these arrows are being ignored because we're already in a trade to the upside. Any downside arrows, again, we need to actually close below this band. And eventually we did. The market traded down into the band and then closed below the band. And what we're looking at is we're looking to the left to see what our last trade entry was to the left. And in this case, it was short. So the short entry is right here. Nice trade moving down. Then the market consolidated here, moving into about the first half hour, and then notice what happened after that. We moved back up to the same algorithm band. We look to the left, our previous trade signal was up. We didn't have a new one in here, and therefore our trade entry was long right here. This was the long entry. The stop is under here. And if my memory serves me correct, this market never, ever has looked back at all the rest of the day. This move alone, coming from here, was about 41.36, moving up to about the 41.66 level. That's 30 handles at 4 ticks. That's a handle. That's 120 ticks. Now notice, again, there was another trade setup here on the algo bands, and we're going to look at those. We did have another algorithm band here. If we look back to the left, our last trade signal was up. We didn't get a new different one in here, so the trade entry was long with the stop under here on a closed basis. And eventually, once you got your scalps out, that stop actually was taken out, and there was a short entry here, resulting in a nice little scalp. Again, staying short on the market with the stop above here, and then eventually through the algorithm band, a long entry here, and then a subsequent long entry occurred right here as we moved up through the band. So again, it's keeping you out of a little chop back and forth. You're not taking every signal, and obviously we're not taking any of the short signals past this point in time. We continued to move up to the upside. Notice there was a second entry again here as we came down into the band and closed up. And then moving a little bit further on, moving back into the band, trade signal to the downside. That was short, and a re-entry short, and staying with that short until we got the signal to the upside, which was long here. And then we moved into about mid-morning. The initial trade was long through here. There could have been an add-on long here. Eventually, a little short trade in here that did not work out. A re-entry on a short for a nice scalp. Again, only trading in the direction of the band. And then eventually a nice move to the upside long. And that takes us up to about 2.5 hours into the trade session. You can see NASDAQ has continued to move higher throughout the day. And then just to show a little recap here, as we're into the time here, we're about 11 minutes before they're going to introduce the FOMC minutes from the interest rate announcement. We traveled back to the algo band. We got a short signal here off the momentum-based indicator. So as we closed down through the band, that was short. And this trade, you'd still be in it, managing it on the short side as we move down. So that's the trade for NASDAQ. Let's take a look at another market. Now let's take a look at a different market. This is the 6E market. That's the euro currency. And the purpose of this is to also show that you don't have to trade these around pit open sessions or during the day sessions. Most of you know, if you trade any of the currencies, that the currencies for the most part are pretty much a 24-hour trading vehicle. They slow down a little bit in the few hours prior to 3 a.m. Eastern time when the European markets open again. But again, it's the same analysis. And so we're looking over here in the pre-market. This was around 1800 Pacific time. Here is the band. This is the algo band. Once established, an algo band is good until a new one is formed. Notice as we moved back up into the band, we did have a prior signal to the upside. This was the long trade entry right in here, and that was a very nice trade. Just a single trade over that time period, and then we got the what we call the European Open session. That was right here. That's at midnight Pacific. We had our next algo band that was established right here. Notice as we moved into it, we look back to the left. Our previous entry was down. Therefore, as we move down through here, it was short. Again, the nice thing about this is we're going to basically ignore any signals in here. We came back up and revisited the band. We had a single trade entry. It would have been long here, and if that was the case, getting stopped out. We had another algo band here, and in this case, a nice trade entry long, resulting in about 10 or 12 ticks. And then as we moved lower through here, a very nice short trade into the algo band, and as we broke through to the short side. Again, these were some re-entry trades, but we'll ignore those because we're only looking at the band trading. So that took us through the first 5 hours of trading. As you can see, some very nice trades, only one of them producing a small stop out loss. So if you can identify when the institution's algorithms are kicking in and have a method to manage them as we've showed here, together with trigger entries going in the proper direction based on momentum. This is an extremely powerful approach. This approach results in trading profits pretty much every day in a trading session. The pluses on this is that there is a very large reward to risk ratio. Stops are small. It doesn't result in a lot of trades, but of course you do have to exercise a lot of patience and discipline in waiting for the proper trade setups. I hope this was beneficial. Thanks for watching, and I hope to see or talk to as many of you in the future as possible. Again, thanks for watching. Have a great day. Bye now.